Workers' compensation. What it is, how it works, and who pays. What is workers' compensation? Workers' compensation, commonly referred to as workers' comp, is a government-mandated program that provides benefits to workers who become injured or ill on the job, or as a result of the job. It is effectively a disability insurance program for workers. Benefits, healthcare benefits, or both, to workers who suffer injury or illness as a direct result of their jobs. In the United States, workers' compensation is handled primarily by the individual states. The required benefits vary greatly, state by state. Texas is the only state that does not require employers to maintain workers' compensation insurance. Key takeaways: workers' compensation is a form of employer insurance coverage that pays benefits to workers who are injured or become disabled as a result of their job. The compensation may include partial salary repayment and coverage of medical costs. Workers' comp is not the same as unemployment benefits or disability insurance. Understanding workers' compensation. Workers' compensation benefits may include partial wage replacement for the period during which the employee cannot work. The benefits may also include reimbursement for healthcare services and occupational therapy. Most workers' compensation programs are paid for by private insurers from premiums paid by the individual employers. Each state has a workers' compensation board, a state agency that oversees the program and intervenes in disputes. There are federal workers' compensation programs that cover federal employees, longshore and harbor workers, and energy employees. Another federal program, the Black Lung Program, handles death and disability benefits for coal miners and their dependents. Workers' compensation benefits. Requirements for workers' compensation vary from state to state, and not all employees are covered in some states. Some states, for example, exclude small businesses from the mandate for coverage. Others have different requirements for various industries. The National Federation of Independent Business (NFIB) maintains a summary of each state's worker compensation requirements. Salary replacement. The salary replacement paid to an employee under workers' compensation is typically less than the person's full salary. The most generous programs pay about 2/3 of the person's gross salary. Workers' compensation benefits are not usually taxable at the state or federal level, compensating for much of the lost income. Healthcare cost reimbursement and survivor benefits. Most compensation plans offer coverage of medical expenses only related to injuries incurred as a direct result of employment. For example, a construction worker could claim compensation for an injury suffered in a fall from scaffolding, but not for an injury incurred while driving to the job site. In other situations, workers can receive the equivalent of sick pay while they are on medical leave. If an employee dies as a result of a work-related incident, workers' compensation makes payments to the worker's dependents. Fast fact: workers' compensation is available only to employees who are injured on the job. It is not the same as disability insurance or unemployment benefits. Special considerations. A claim for workers' compensation may be disputed by an employer. In that case, the Workers' Compensation Board may be asked to resolve the